Good afternoon. There's been a meaningful and heated discussion and debate whether the U.S. will enter into a recession this year. A recession is typically measured by 2 consecutive quarters of economic contraction. If this is the way we measure a recession, then in my opinion, we're probably already in a recession in the United States. Why do I say that? Because in the first quarter, the US GDP contracted by 1.6%. Now the Atlanta Fed is estimating that US GDP will contract by 2.1% this coming year. So for me, it's not really a question whether the US is in a recession or not. To me, the question is how severe and how long this recession will go. Unfortunately, I have a more negative outlook than many are estimating, particularly on Wall Street. Why? We just came out of maybe the biggest bubble in history. Because of the lockdowns, the Federal Reserve took interest rates to zero, expanded their balance sheet by $4 trillion, and increased the money supply by over 40% over a 2-year time frame. As a result, it created a boom in stocks, bonds, and real estate, and created this massive positive wealth effect while that was occurring. Unfortunately, because of their actions and overstimulating the economy, plus with fiscal policies that haven't been very prudent or smart, of spending too much money, we now have meaningful inflation. All that excess money has seeped out of assets and started moving into the price of goods and now into the price of services. So year over year, as measured by CPI, Consumer Price Index, or PPI, Producer Price Index, inflation is averaging over 8%, and in my view, that understates where inflation really is. And I think inflation is far more structural than transitory, as policymakers and Federal Reserve officials have liked to indicate. As a result, the Federal Reserve has had to pivot in a very hard direction and has started to increase interest rates. They've already increased interest rates by 150 basis points, with more to come. They've indicated they're going to shrink their balance sheet by over $1 trillion. And lastly, the growth in the money supply has really slowed down. As a result of these factors, we're starting to see this asset bubble collapse. The U.S. economy, or the U.S. stock market, should I say, has lost over $10 trillion for investors. The crypto markets have wiped out $2 trillion of investor capital. And the bond market, fixed income, has had its worst year since the 1700s, which is hard to conceptualize. Trillions of dollars of losses. So just like we had a positive wealth effect when asset values were rising, now we have a negative wealth effect. So I think that is going to make this recession far deeper and longer than people anticipate. Further, I've never been a person that believes in transitory inflation. I'm a monetarist. I believe when you increase the money supply by a significant level, it will lead to inflation. And I think it will take longer for inflation to be wrung out of the system. I think inflation will probably run hot for at least another 18 to 24 months, coming down, but far above the 2% level the Fed would like to get to. Therefore, the Fed's between a rock and a hard place, in that if they start becoming more accommodative, inflation's going to rip again. If they continue to raise interest rates and take money out of the system, asset values are going to continue to collapse. Therefore, I think because of those factors, we're going to probably end up in an area called stagflation for some period of time. That dirty word where prices continue to escalate and the economy is in a recession. Now, because of those two factors and a third factor, and that's what's going on around the globe. If you look at Europe, Europe is in a far worse position than America because they have to import most of their energy. With the war in Ukraine and Russia, it's crimping their supply of energy. And they were already structurally weaker than the US economy. So I think Europe is going to plunge into a very severe recession. And China, which has been the economic engine for the last 20, 25 years, has its own big problems. Their economy is slowed dramatically, and they have a significant problems in their property, residential real estate markets particularly. So I think we're going to have 2/3 of the world's economy in Europe and China, and you can throw Japan in there that's in a very bad position. So I think we're heading into a global recession where there's really no bright spots around the globe. Unfortunately, because of these different three factors, collapsing asset values, more persistent inflation, and what's going on around the globe, I think this recession is going to go longer and be more severe and last at a minimum 18 months, but probably more likely 24 to 36 months. I hate to be a bearer of bad news, but I'm always going to play it straight with you. Be careful in the equity markets, be careful with your businesses, and good luck. Thank you for your time.